Welcome to ET Now Startup Central, India's first and only daily show dedicated to startups, technology and entrepreneurship. I'm Chandra Shrikant coming to you live from India's Startup and Technology Hub, Bengaluru. And considering it's April 30th today, we will have a monthly funding meter in just a bit on the show to really take you through all the big deals that made the headlines in the last month. But we have to start with our top headline, which is again have to do with Walmart and Flipkart. This is the top story that we've been covering very closely for the last week, and we've really been counting down to it in a sense because we expect this deal to be announced anytime this week. It's just days away from an official announcement, so time to get you insights from an interview that SoftBank founder and chairman Masayoshi Son did with the Times of India. We're just playing some key lines from that interview to the Times of India by Masa Son, in which he has said that they are open to all offers. So this is the first time that SoftBank founder and chairman Masayoshi Son has said anything on Flipkart. And it's important to remember here that SoftBank is the biggest stakeholder in Flipkart with over 20%, and they will be exiting some of that stake as a result of this deal. So they have said that they are not a controlling party, but definitely an interested party, and they are open to all offers, as long as it gives a good return. Now, it's important to analyze the statement because SoftBank has pretty much been the only investor on Flipkart's board that's been holding out against Walmart. It's perhaps been the lone investor that's still awaiting and open to an offer from Amazon, but everybody else on board is more comfortable with Walmart at this point, whereas SoftBank is perhaps still hoping for some sort of sweetener coming from Amazon's way. But considering, that hasn't happened, all these months of negotiations, all these weeks of negotiations, though there were rumors of a breakup fee, I think it's fair to assume that the Walmart deal is the one that will go through. But clearly those flashes seem to indicate that SoftBank is still open to all offers. He's just said that they are studying and discussing it as an interested party, but not a controlling party. We will know in a few days what the exact terms are, how much control Walmart gets. But this is a good deal for SoftBank because remember, their other e-commerce investment in India, Snapdeal, did not work out well for them. They planned to merge Snapdeal with Flipkart last year, but those negotiations fell through. And now if this deal happens, then SoftBank gets an exit in Flipkart within a year of investment. So, this is pretty much comparable to the kind of return that they got from their Alibaba investment in China many years back. But moving away from that to the special segment we have this evening, as promised, our monthly funding meter with Venture Intelligence. They collate this data for us every week, and considering it's the last day of April, time to really look at the headline numbers as far as April was concerned. And on the face of it, April seemed like a very good month. If you look at the overall number of deals and investment, it ran into hundreds of millions of dollars, primarily driven by the likes of Paytm Mall, which announced a mega investment. But apart from that, you've had many deals happening both in the VC space as well as the angel space. And to really deconstruct all that deal action, there you have the big number, 50 deals worth $766 million in April. That looks like a very huge sum. But to take us through the details on what these deals mean, and is it an aberration considering the year ago period just saw about $125 million, we have Arun Natarajan, the founder of Venture Intelligence, joining us from Chennai. Arun, on the face of it, these are great numbers. I mean, 700 odd million compared to 100 odd million in the year ago period, but primarily driven by Paytm Mall, which raised over $400 million. So how would you really analyze the deal trends as far as April is concerned?
April has indeed been a very strong month for venture capital investments, and I would say across the board. So we've tracked something like 50 investments. This is very unusual given that we've been going at 30 kind of investments per month in the last couple of years. So this is really a standout month in terms of also the value of the deal that you mentioned. But we would look at this segment especially in terms of the volume or the number of transactions, because that is more consistent, regardless of the big ticket deals like Paytm Mall that you mentioned. So the point is more to do with how far have we come from the lows of last year, and this represents the 50 investments in April represents a 12-month high, including these big ticket deals. But even if we are to remove those big ticket deals and cap a classic venture capital deal at 20 million, say, even then it's a 6-month high, and we are talking about 36 such investments, which is actually half the number of such investments that happened in the whole of the Jan-March quarter this year. So the really standout indicator, I would say, is whether it is angel deals or seed or Series A, the really ones where we were seeing mixed picture in the last couple of years, at least month on month from March to April, all three segments have grown strongly. Obviously it remains to be seen whether it can sustain, but definitely April has been a standout month for venture capital in general.
Arun, any patterns that you see in, the kind of investments, the kind of investors that we've seen? We've been playing some of the top investors on screen, the likes of Nexus Venture Partners, Omidyar, Fireside. All of them have been pretty active in the last month, not to speak of Kalari, which also scored an exit in its portfolio by divesting Imbibe to Reliance. But any other patterns that you see in terms of the manner of investments or investors?
Sure. So clearly, if you look at the investment mix as such, and the dollar value has also shot up, thanks to just one large investment of Alibaba and SoftBank in Paytm Mall. No, despite that, if you look at it from a mix of B2C versus B2B, we've been seeing more B2B bias. Maybe the SaaS represents a more safe sector in the last few quarters, but that has clearly changed in April. So as many as 60% of the investments have gone into B2C, and that typically is where you see absorption of a lot of capital. So that clearly is a standout. So we saw companies, for example, like Nykaa, the beauty products retailer, raise something like $26 million from predominantly Indian family offices, right? And they were able to give exit to a couple of existing VCs in that particular company. And obviously, it's not to say that B2B has gone away. We saw somebody which is actually more of a private equity investor, one of the better known names in India, Chris Capital, actually come down the spectrum and invest in a relatively young company like Vartana, which actually is in the business of financing schools, private schools. And this company has been backed earlier by, people like Omidyar Network and Michael Dell Foundation and so on. So we are seeing a very interesting mix of deals, more tilt towards B2C now. And that really, is kind of where the challenge has been in the last several quarters. So that's really the, what we are seeing in terms of the mix of investments.
Right. And finally, Arun, this sort of resurgence that you've seen, you mentioned that, even outside of Paytm Mall, there is a lot of resurgence in deals, particularly in B2C. It's also a 6-month high. How sustainable is it going to be come May? I mean, there's obviously a big Flipkart Walmart deal on the anvil, but that's a mega deal that won't even be counted in the usual VC tally. But how sustainable do you think this is going to be, the kind of numbers that we've seen in April?
Sure. So if you look at it, I think, the Grofers investment in the last quarter, can be called a trendsetter. This company has not raised money, ever since 2015. And, it has been had, admittedly by the management, they've come out and said as much, quite a few changes in the business model and so on. So, we saw last year, of course, that, Flipkart and Ola bite the bullet and actually, take down rounds as such. So now that Grofers has also kind of done that. And I think basically for the whole ecosystem from an entrepreneur's perspective, in the B2C segment especially, there's been a reset in terms of valuation expectation. So the last couple of years, entrepreneurs could have resisted and say, hope that 2015 would come back. Now everybody, and we talk about Flipkart, the Walmart, the big one that's coming up. All the reports are talking about a 12 billion, not the 15 billion of 2015, right? So if that's the case for a Flipkart, so the reset in valuation, I think, is helping facilitate many deals to go through, and we can expect that to continue. The second factor is the sheer number of new funds raised, right? So whether it is non-tech or tech, there have been new funds in the market, and I'm sure they would be ready to deploy. I'm talking about names like 314 Capital, Waterbridge Ventures in the tech segment. We're talking about Fireside Ventures, Omnivore Partners in the non-tech segment. I'm sure all of this dry powder will get to be, starting to be put to work in the months forward. So that all indicates to a better, months ahead. However, one caveat, I would say is May being a holiday month, we don't know. That's probably the joker in the pack.
Thanks for that, Arun. And apart from the huge funds that VCs are sitting on, I think the Flipkart Walmart deal itself is going to be an important trigger because it really validates the strength of the Indian startup ecosystem. The fact that Flipkart, founded barely a decade back, is able to finally deliver a mega exit, for many of its investors. That's going to be a huge validation and will perhaps also lead to some deal flow, also lend more positivity as far as the startup ecosystem is concerned. But moving away from that, when you talk about Flipkart, Amazon can't be far behind. So Amazon is deciding to really ramp up its presence when it comes to fulfillment centers in India. My colleague Rahul Daima caught up with Amazon's head of fulfillment for India, Akhil Saxena, to really understand the expansion plans in place over the next few months. Now, with the addition of these 5 extra ones, that will take Amazon's total India tally to about 67. So I guess Amazon rebooting, really putting in more ammunition to ensure that it doesn't lose out to the Flipkart Walmart combination in the coming weeks. Listen in to this interview.
Very excited today to announce the launch of 5 new fulfillment centers, and these fulfillment centers will basically come well before the festive season. So the sellers can bring in their new selection, unique selection in time for our customers before the festive season starts. These 5 fulfillment centers will basically enhance our capacity, and over the last year this will be about 1.5 times the increase in capacity.
All right. Talk to us about what would this fulfillment centers cater to, because you have larger appliances fulfillment centers that exclusively house them. You also have so the size and scale of the things also will they really be one of your largest fulfillment centers that you have?
So these are pretty large buildings. So with the addition of these 5 fulfillment centers, our total storage cube will go up from 16 million cubic feet to 20 million cubic feet. And if you compare over the last year, this will go from 13 million cubic feet to 20 million cubic feet, right? So it's a pretty large amount of cube that is being added with these 5 buildings. Other than the large appliances, these fulfillment centers will take care of all the other categories which are there that we basically serve to our customers. So it is not just about the books or the software, books, media, everything else will be available, including fashion, home appliances, etc. So keep the large appliances side separate, but other than that, these fulfillment centers will be able to take care of everything else.
Okay, these are not exclusive, will sort of house everything under the roof.
Other than the LA and furniture, these will basically be able to take care of all the other products.
All right. Akhil, talk to us about the journey of expanding these fulfillment centers over the last year, from about 30, 40 that you had, sort of inching closer to the 70 number. Does this indicate the larger demand that you're seeing in terms of growth and response from customers in India? A lot of them moving to e-commerce and the habits really shifting?
Yeah, we are very excited to see the growth. And if you look at last year, we had about 41 fulfillment centers, and this year we have added more. These are the 5 which is the latest in series. So with this addition, we will have 67 fulfillment centers. If you take 4 years ago, we were about only 1 fulfillment center, that was in Bhiwandi. And we have added over the period of time continuously to take care of the growth that we are seeing in the business. These fulfillment centers now are available in 13 states of the country, and our transportation network basically delivers to every single state and union territory of the country, right? Okay. So basically, in conjunction with the fulfillment center, we have also expanded our transportation network.
All right. Talk to us about the regulatory changes. Post GST has life become more simpler because you did have some taxation issues in some states like UP and Karnataka, making it difficult for you to move around goods. So, with GST in place and more clarity, are things a lot more easier to work out than before?
Yeah, GST has been very helpful because some of the taxes that were imposed by few states, like entry tax, those have all got subsumed in the GST. The other thing is movement of goods across state borders has become easier. The paperwork is much more simplified.
On that note, we'll take a break at this point, but come back with two important updates for you. One, certainly that you can use because it's going to affect the prices of the phones you buy from Xiaomi. And we also tell you why Myntra is betting big on India's tier 2 and tier 3 towns. Take a break and come back for ED Now Startup Central. Welcome back to ED Now Startup Central. Now here's some news that you can use. Xiaomi has announced that it is going to hike prices of its popular Redmi Note 5 phones in India as well as the Mi LED TVs. Now remember, while the Redmi Note has been a hot selling product on Flipkart, the Mi LED TV has really taken the traditional TV market by storm. It's been steadily gaining market share in the last few months. But now Xiaomi has come out and said that they will be hiking the prices of both these products. So while the phone price will go up by about rupees 1,000, the TV prices will go up by rupees 5,000. This is to really make up for the recent import duty hike on PSBs, PCBs or printed circuit boards. Remember, the government recently hiked duty on PCBs to really give a boost to local manufacturing, and Xiaomi says that it imports a lot of PCBs to really meet local demand. So as a result of the increase in import duty, it's been forced to hike the price of the products. Now 1,000, 5,000, I'm not really sure if it will dim the enthusiasm that we've seen for Xiaomi products in the market. The Xiaomi's India head Manu Jain has also tweeted. I'm just going to pull out that tweet for you. And in his tweet, he said that in order to ramp up supply for Redmi Note 5 Pro and Mi TV 4, we are marginally increasing the prices. This is because of the recent changes in PCBA import taxes and INR depreciation. So pretty much the same two factors cited by him as well. Whether this will really have an impact on sales, on the sentiment of Xiaomi fans, we will know in the coming months. But the last story that we have on the show this evening is an interesting one from Myntra, because who would have thought that a website that retails high-end premium brands gets 50% of its business from tier 2 and tier 3 cities in India. So that's where a lot of shopping is happening for fashion brands. My colleague Tushar caught up with Myntra CEO Anant Narayanan to really understand this trend and what Myntra is going to do to target the Bharat market. Remember, Myntra also has plans to open offline stores, hopefully with Walmart becoming a parent investor along with Flipkart. They will have more ammunition to execute all these plans in the coming months. Listen in to what Anant Narayanan told to my colleague Tushar.
I think, by the way, today 55% of my revenues comes from tier 2 and beyond. So we do focus on SECA customers. We do focus on customers that are slightly more premium. But I believe that even in tier 2 cities, those customers exist, right? So I think we'll absolutely go after them.
Right. Sir, are you a little concerned about the affordability and the price range that you see in tier 2 cities, or are you tailoring products differently to suit according to their needs? Sir?
So a bit of both. So we certainly believe that there is affordability in tier 2 towns as well. And I think there's a lot of need and want for brands, because in the internet you see all these brands and you want access to them. But at the same time, we have a 25% private label portfolio. There we're able to tailor the products to an affordable range that works for people.
Right, sir. Will you also open your offline stores as far as tier 2, tier 3 cities are concerned, sir?
Yeah, in the works, never say never.
Customers of premium products exist in tier 2 cities as well, so that's an interesting market for e-commerce players to tap. But on that note, completely out of time in this edition of ET Now Startup Central. Thanks so much for watching. Stay tuned in to ET Now for more news and updates.